Hey guys, welcome to another episode of Everything Business. Welcome to the live marathon 2021. Alright, I know that a lot of you guys are maybe anxious, worried. You don't need to be worried, you don't need to be anxious. Just pay attention, get practicing, and you will do well. Now, I will be doing this marathon in two parts. Right, I'll be doing one part now, another part tomorrow. Right, today I'll be doing a couple topics. Right, I will not be able to cover all topics in just 2 days. Right, so I will do as much as I can. Right, and I really do hope that it will help you. All right, so my name is Sir Jackson, as you would have already guessed. So let's get right into it. I do have here two past paper questions that I'll be working from. Right, you can look in the description. You will see the link to these questions, so you can follow along while I am working. All right. So the first question that I'll be looking at that is from the 2011 paper, 2011. Right. If you did not see, if you did not know, if you did not see my video from this morning, right, talking about this accounting systems, then you need to go and check it out. I'll leave the link for that video in the description, so you can just check the description for whatever it is. Right. If you have questions, if you're not following, if you have questions, you can just send me a message in the chat, or you can type it in the chat, and I will see how best I can respond. Alright, so let's go with the first thing that I'll be looking at today. Right, it has to do with ledgers and the trial balance. Right, or it has some amount of books of original entry in it as well. The first thing that we need to do is we need to look at the concepts that you need to remember. Right, so let's look at for the ledgers and trial balance. Right? It's the topic that they have on their thing that they say they're going to test you guys on. Right? But let's look at the core concepts. Now we have three types of ledgers. Three types. Three types of ledgers. We have the purchases ledger, which we use to record our creditors' accounts, creditors' personal accounts, right? We have the sales ledger that we use to record our debtors. Now remember that debtors are people who owe us money, right? People who owe the business money. They are debtors, right? So we use the sales journal to record our debtors accounts, and these are personal accounts as well. And then we have the general journal. Sorry, not the general journal, the general ledger, right? The general ledger is used to record everything else. So expenses, right? Your assets, your liabilities, right? So it is important for you to understand these concepts, right? So that we have three types of ledgers: purchases ledger, sales ledger, general ledger. Purchases ledger is used to record the creditors accounts. Sales ledger is used to record the debtors accounts, and your general ledger is used to record everything else basically, right? So your expenses, assets, liabilities, revenues, stuff like that, right? Everything else will be recorded in the general ledger. All right. So now that we got this out of the way, let's look at the concepts for the trial balance. So concepts for trial balance. Alright. Now we have to remember that the trial balance, right? The trial balance is used to check the arithmetic accuracy of the ledgers. So the ledgers is where we would find the double entry account, right? Now the trial balance checks the accuracy of the ledgers, and that is in my video that I posted this morning, accounting systems. Check in the description, and you will see that link, the link to that video. So the trial balance check the accuracy of the ledgers, right? Now, in order for you to understand sufficiently what the trial balance is, right, it is important that you understand the accounts that normally carry a debit balance and the accounts that normally carry credit balances, right? That is important. So let's look at the accounts, right, that normally carry debit balances and accounts with credit balances, right? This is a fun way to understand, you know, right? I could go into the details or into the high theory and tell you about, you know, assets. To increase asset accounts you would debit, to decrease asset accounts you would credit, expense accounts you would do the same thing, and all these. I could tell you like that, right? But I find that my students like when I do this too, right? So the accounts that normally carry debit balances, right? So all assets. Wow, this marker is not really doing much justice. Blue marker, yeah. Let's take this blue marker out. So all assets, right? All assets carries debit balances, right? All expenses, right? It is important for you to then understand, guys, what expenses are. If you do not understand what expenses are, you are going to find yourself in trouble, right? Remember that expenses are the cost of operating the business, right? So all expenses carries debit balances, right? So we say all assets, all expenses carry debit balances, right? So that's basically it, you know? That is basically it for the debit accounts that carries debit balances. All assets, all expenses. Accounts that carries credit balances, liabilities. So all liabilities accounts carry credit balances, right? Revenues, right? Revenues carries credit balances as well. For example, sales. Yeah, sales is a revenue, right? All provisions accounts. All provisions accounts carries a credit balance, right? So this is basically the broad heading. And if you can understand this, then you should have no problem in doing the question that we are about to do. Alright, so in short or in summary, accounts that normally carry debit balances, all assets, all expenses. Accounts that normally carry credit balances, all liabilities, all revenues, and all provision accounts. Alright, good. So, and you have to remember that with the trial balance must be balanced. That's why it's called a trial balance. You are trying the balances of the double entry accounts that are in the ledgers, whether it be the purchases ledger, whether it be the sales ledger, or it be the general ledger. You are trying those balances. Alright? That is why it's called a trial balance. Alright? Alright, good. It goes without saying that sometimes when they ask you to do trial balance, they may ask you to calculate the capital figure, right? And if they ask you to calculate the capital figure, you have to remember the accounting equation, which is assets equal capital plus liabilities. So if you want to find capital, then you would have to subtract the liabilities from the assets. But we're going to do a question like that right now. So turn to 2011 paper, question number 3. Question number 3A, right? That is what we'll be looking at right now. Right? So get that ready. Alright, so now that you have found the question, right, we're going to do question 3A. So it says that as at November 30, 2010, the following personal account balances existed in the sales and purchases ledger of small, Moon Enterprises, right? And we are given the sales ledger, which has been Marshall. We are given the purchases ledger that has an account for Hamilton, right? It continues to say that the following information was extracted from the company's day books for the month of December 2010, right? So we are given the first thing at the top, right? We are given the opening balances, right? And then we are given the sales day book, we are given the purchases day book, the sales returns day book, and the purchases returns day book. Now I know you may be wondering, right, what we mean. You may be wondering what we mean by sales returns. Sales returns is the same as returns inwards. Purchases returns is the same as returns outwards. Alright, so just bear that in mind. Then we are given a cash book here, right? And just to jog your remembrance, cash book is a book of original entry that is used to record cash received, cash or checks received, or cash or checks paid out by the business. Alright, so you have to remember that, right? If you don't remember about cash book, then you can check through my videos. There is a video on cash book. Alright, the first thing that they ask us to do is to prepare and balance the personal accounts appearing in the ledgers of Smallwood Enterprises as at the 31st of December 2010, and that's 9 marks, right? So they're asking us to prepare the personal account, right? Personal accounts as they would appear in Small Moon Enterprises. Yeah. Now remember that personal accounts is normally, people names, right? Consists of debtors and creditors, right? Those are personal accounts. So let us start the question. So this is past paper 2011, right? Question 3. Question 3, 1. Question 3I, if you want to call it that. So the personal accounts that we would need is Marshall and Hamilton. So join up for a double entry account. Debit, always put in a debit and credit. In the exam they made us draw it up for you, that they will have the lines so you can do that. Right? So we're gonna put in our opening balances. So this is for Marshall. Right, and then we have Hamilton. Right. So these guys' account would be in the sales. Well, his account would be the sales ledger. Let me get my reading. I don't have my reading. But his account would be in the sales ledger because he's a debtor. His account would be in the purchases ledger because he is a creditor. Right? So Hamilton account and this is Marshall account. If you want to put on the account, you can put it on there. Alright? So the opening balance for Marshall, and the reason, right? The opening balance is going to be on the debit side. So December 1, balance BD. The reason why it's on the debit side is because it's a debtor's account. Debtor's account carries credit balances, right? And debtor is a current asset, so you can really use that, right? So the amount for Marshall opening balance, right, is 32,500. So you need to give this thing more space. 32,500. 32,500. Alright? And then we can put in the opening balance for Hamilton as well, right? Because they give it to us there. So Hamilton, because it's a creditor, the opening balance will be on the credit side, right? So it is December 1, balance brought down, and the amount for him is 19,290. Right? Good. Alright, so we're moving on. The next item that we are faced with here is, it says that the sales day book, right? The sales day book. So it means that we are selling now to Marshall, we are selling to Marshall on credit, and that is why it is in the sales day book. So December 4, it's going to go on the debit side because we are selling, Marshall is receiving, right? December 4, right? December 4 sales, that's what you would have in the details, and the amount is 25,200. Then you have December 21 sales, and the amount is what? $8,002. Alright, good. Right? Then now, we're moving on to the purchases day book. Right? So the purchases day book is this. The purchases ledger. The purchases day book is linked to the purchases ledger, just like the sales is linked to the sales ledger. Right? So we go, what is it now? December 6th. Right? And because Hamilton, right, we are buying from Hamilton and his account is increasing. To increase a creditor's account, then we will make a credit entry. So that's December 6th. I will write purchases there. Right? I don't have enough space. So it's 3,150. Right? And then now, on December 29, we also bought some more goods from Hamilton. Right? So if you want to look at it two ways, you can look at it from the standpoint that, alright, Hamilton's account is a creditor's account, and to increase a creditor's account, you always make a credit entry. Right? You can look at it that way. Or you can say, alright, Hamilton is paying out, giving out, right, goods to us. So if he's giving out, then this side, which is the paying side, right? Remember in double entry, right? Debit side is the receiving side, credit side is the paying side. Yeah, you can use that reasoning as well, right? So you can say now December 29 purchases Hamilton, right? 2,250. Good, right? Yeah. But then if you continue looking, we have sales returns, which is what? Returns inwards. Sales returns inwards. So Marshall is sending back 3,100 worth of goods to us. Are you seeing that? Marshall is sending back 3,100 goods worth of goods to us. For whatever reason, Marshall is sending it back to us. Right? So if it is sending it back to us, then in Marshall's account, right, he is now paying out or giving out goods back to us. Or we want to decrease the debtor's account. And to decrease the debtor's account, right, we have to make a credit entry. Because the amount that he would owe to us is now reducing. Alright? So we go December, what is the date that they gave? December 6th. December 6th, right? Let me just extend my thing here. Yeah, so December 6th, sales returns, right? And the amount is 3,100, right? Now for Hamilton, right, they say that we have purchases returns, and purchases returns is the same as returns outwards, right? So we are now giving or sending back goods to Hamilton. It means therefore that the amount that we owe Hamilton is going to reduce. And if we are going to reduce the amount that we owe to the creditor, then we have to make a debit entry, right? Or you can look at it another way. You can look at it that Hamilton is now going to receive goods from us. So that's why on the receiving side, the debit side, right, we would put the entry on the debit side. Right, so that's another way to look at it. So December 11, right, purchases returns of, what is it, 415. Alright, good. Now look at it. They gave us now cash book information. Looking in the cash book information, or looking at the cash book information, we will realize that we have received $26,000 from Marshall. Marshall owed us some money now. And on the 23rd of December, he is paying us back $26,000. Can you see that? Very good. Right? He is paying us back what? $26,000. And because he is paying us back $26,000, then it means that it is reducing the amount that he owed to us. So in his account, we are going to make a credit entry, right? Because he is giving us money, or it is reducing the amount of money that he owed to us. So December 23, right? And he paid us the money by a check, right? How do I know that he used a check? Because if you look in the cash book, you will see the column there that says bank. Anytime we see bank in accounting, you know we're talking about check, or anytime you see check in accounting, you know that we're talking about bank. Alright? So the amount is $26,000. Please ensure that you get your numbers to align underneath each other as it relates to, you know, tens and ones and all of those things that you learned in primary school. Alright. Then we move on now. Looking at, if you realize, you know, Marshall also paid us some money in cash on December 23. But we would not record that money here. That money would be recorded in the cash book. Yeah? Right? That money would be recorded in the cash book and the sales because it was cash sales. So the fact that they tell us that it is Marshall, it's not important. They tell us that to throw you off. Alright? So we are not going to use that here. Right? Alright. So the same thing now for Hamilton. So Hamilton, we paid some money to Hamilton in cash, but we know that we're not going to use that. Well, that's not a matter of we paying it to him. We bought some goods from Hamilton using cash. So the double entry for that would have been purchases and the cash. Right? The fact that they gave us Hamilton's name is not important to this particular question. Right? And so, you know, they just tell that to throw you off to see if you can identify what information that they need to use to record here. Right? Now, Hamilton, right, paid us on the December 28th. Right, we paid Hamilton some money, $15,000, which is we are reducing the amount of money that we owe to Hamilton, which means that we are reducing the creditors account, which means that we have to debit, right? So December 28th, or you can look at it that Hamilton is receiving money, yeah, right? December 28th, bank, $15,000, right? And now we can now balance off these accounts. Right? How do we balance off a double entry account? So you realize I'm teaching double entry just the same now. How do we balance off double entry account? First thing you do, you need to add up both sides to get your total. So when I add up these sides, right, I get 65,702. I add up this side, I get 65,000. I need to get my red marker so you can see, right? Alright, so I get 65,702. 65,702. You can write the figure very faintly at the top or somewhere on your paper, right? When I add up the credit side, right? The credit side, I would get 29,100. So the difference between both sides, right? The difference between both sides, right, would be now my balance carried down. The balance carried down is always placed on the side that has the smaller amount or the smallest amount. So which side is the smallest amount? Which is the credit side, right? Why do I have BR over here? Right? Supposed to be CR, credit, right? So yeah, so December, and it's always for the end of the month. December 31st, balance carried down, right, would be the difference between 65,702 and 29,100, which would be 37,102. 37,102. Alright, now that both sides are equal, we can just close off the account. We would have 65,702, 65,702. So we finish with Marshall's account. We're going to do the same for Hamilton's account. We add up both sides, right? We add up both sides. We get 24,690 for this side. 24,000. Let me use a different thing. 24,690. And on the debit side, we have 15,415. Right? Obviously, the balance carried on is going to be on the debit side because the debit side has the smallest amount. So at the end of the month, December 31, balance carried down. Balance carried down is going to be 9,275, 275, and then the total is going to be 24,690. Ensure that your totals are in the same line. 24,690. And you have gotten 9 marks. by just doing that. Alright? 9 marks by just doing this. You can snap a picture or whatever, because you're not going to be able to go back until after the recording. Alright, you can snap a screenshot or whatever. Alright, so let me just take this off now. The question went on to say, that we should prepare and close the sales and purchases accounts in the general ledger of Small Moon Enterprise. So we are to prepare and show the sales and purchases account. Right? So let's do that. So let's look at the sales account. This is my sales account, right? Now it is important for you to understand that when you are preparing the sales account, you have to show both cash sales and credit sales, and that is one of the reasons why they gave us this cash sales there in the cash book, right? And the credit sales, right? So we can look at the cash sales now. So December 23rd, right? Cash. Right? We have to remember that the sales account is a revenue account, and in order to increase the revenue account, you make a credit entry. I just normally tell my students to remember that the sales account is always credited. Yeah, sales account always credited. And they can't go wrong if they do that. Just like the capital account, always credited. Yeah. Alright, so cash, $400. Right? We also have credit sales. So at December 31, total credit sales. Now remember, we just did the total credit sales a while ago, right? We just had the total. We had the Marshall account, right? Total credit sales amounted to what is it now? Total credit sales. The balance on Marshall's account was 37,102. So it's 37,102, right? So we're going to balance off this account now. Balancing off this account, December 31. Add up both sides to get your total. This side is 0. This side is 37,502. So obviously it's going to be 37,502. But then look at what I'm going to write here, right? We're going to transfer this, transfer to trading account, because sales is utilized in the trading account. You want to write transfer to trading account, 37,502, right? So you have 37,502, double line that, 37,502, double line that. Alright, so for the purchases account, debit and credit, right? We know that the purchases account, I normally tell my students that the purchases account is always debited, right? So let us put in the information, right? So December 28th, cash, and the amount there, if you look in the cash book, right? If you look in the cash book, the amount for cash is $500, right? And then also at the end of the period, the total credit purchases right, was 9,275. How do I get this 9,275? It is the balance that was left on Hamilton's account. That's the only creditor we have, right? So that's why we have total credit purchases. And so we're going to balance of the account now. December 31, balance CD. Balance CD will be 9,000 plus the 500 will be 9,775. 9,775, right? Sorry, it wouldn't write balance CD. Sorry, it would be transferring it. So transfer to trading account, right? 9,775. Alright, and that you get the 4 marks. 4 marks for this same, 4 marks for both of them. Right? Yeah. So we're going on fine with the question. Right? You can snap a picture. As I said before, you won't be able to go back. You won't be able to go back to this until after the recording, till after everything. Right? So you can just snap a picture now. For persons who are just joining, we are doing 2011 paper question 3, right? You can look in the description and you will see the link that you can get this paper, right? So you can follow along while I am working it out. Alright? Good. So let's look at part B of question number 3, right? Part B of question number 3. Let me hope that you would have snapped your picture already. Alright, good. Alright, wonderful. Alright, so let's look at part B now. So part B, if you realize what part B is asking, part B, yeah. So part B is really asking for you to do over this trial balance. It's a trial balance that they give us, and they're asking you to do it over, right? Somebody had asked me to do a trial balance, right? Remember the concept of trial balance. The accounts that normally carry debit balance, assets account, all assets, all expenses. Accounts that normally carry credit balance, liabilities, revenues, provisions. All of these things carry credit balances. So remember those concepts and you should be good. Right? So let's go now. I'm going to draw up my trial balance. My trial balance, my lines are probably sometimes not going to be straight. So this is the trial balance for Metal Works Enterprise. You would write Metal Works Enterprise, right? Trial balance as at April 30, 2010. April 30, 2010. Alright? Chances are in the exam you may not have to draw this up. Right? They may have it drawn up already for you, but you never can tell. It's important to learn how to draw it up. Right? Put in your heading and everything. Alright. Now, so you're looking at the trial balance here. Right? So I'm going to just do this trial balance in the proper way. Alright? So, debit column, credit column. The first item there is land and building. Right? Land and building is the first item. That carries a debit balance because it is an asset, a fixed asset. So land and building, right, it carries a debit balance. So it should be on the debit side. So that's $68,000. Right? Then the next item is a bank overdraft. A bank overdraft. For persons who don't know, bank overdraft is a service provided by the bank where they allow you to draw more money than what you have in the business. Bank overdraft is actually a liability to the business. You hear what I said? A liability. Right? What balances does liability carry? Credit balances. Very good. So bank overdraft should be on the credit side, but they have it on the debit side here to trick us. So it's 6,500. Right? And then the next item is cash. cash in hand, or if they have cash in hand, whatever, it's the same thing. So they have cash in hand, and the amount for cash in hand is 3,200. It is on the correct side in the question, right? The next item there is accounts receivable, right? And accounts receivable is another fancy name for debtors, right? It's a new name. So accounts receivable. So accounts receivable, or you can put debtors. Right? So debtors. The amount for accounts receivable is what? 49,000, and it is on the right side. Accounts receivable is an asset, current asset to be exact. Remember that I said all assets carries debit balances. Right? Then you have carriage inwards. Carriage inwards, right? The cost of carrying the goods, delivering the goods to the business. Carriage inwards is 1,500, and it is on the correct side. Carriage inwards is actually a type of expense, you know, right? But in the income statement, we don't treat it like how we treat other expenses, just like purchases. Purchases is also a type of expense, but we don't treat it like how we treat other expenses, right? Other expenses are like the cost of operating the firm, rent, and also. Alright, rent paid. Let me clarify that. Then you have carriage outwards. Now, carriage outwards, like carriage inwards, they are expenses, but we don't treat them the same way. But in the question, they have carriage outwards on the credit column to try and trick you again. But carriage outwards is an expense which should be debited. All expenses carry debit balances. The next one, right, is what? Accounts payable. Accounts payable or creditors, right? Accounts payable, creditors, liability, right, carries credit balance, so it should be on the credit side. Well, they do have it on the credit side here, 38,250. Alright. Next one, rent received. Now, a while ago, when I said rent as an expense, I qualified myself by saying rent paid, because rent paid is an expense while rent received is a revenue. And what did you say about revenues again? All revenues must carry what? Credit balances. Yes, man, big up himself. Right? So rent received, right, is a revenue. They have it on the debit side, which should not be on the debit side, it should be on the credit side. So 10,000, rent received is what? 10,200. Right? And then you have motor vehicle, which is an asset. Motor vehicle is an asset, 36,000. It should be on the debit side. They have it on the correct side in the question. Next item, provision for depreciation. Right? They have allowance for depreciation, but it's the same thing as provision for depreciation. What did I say about provision? I said that provision, all provisions carry credit balances. They have it here on the credit side, which is on the correct side. So it's 12,000. Yeah. The next one, the next item that they have there is purchases returns. Purchases returns is the same as what? Returns outwards. Returns outwards carries a credit balance, right? So purchases returns is $600. Alright? And then now we have the sales returns. Sales returns is the same as returns inwards. Inwards carries a debit balance. And they have it on the credit side to try and trick you, but it actually should be on the debit side. So it's 1,100. And then now we have commissions paid. Now, commissions paid, right, can also be a revenue. Well, sorry, commissions paid is an expense, but if you have commissions received, then that is a revenue. Alright? But this is an expense, so you know it goes in the debit column. Commissions paid is what? 1,600. Right? And then now we have loans. Loans, So liability, so you must have a credit balance. So loans, right, the amount for loans is what? 25,000. Put it on the credit side, right? And then the next one is purchase, sales. Sales, revenue, carry credit balances, right? So 105,400, 105,400, right? Or I'm running off the screen now. So let me just lower this a little bit. Alright, so sales, then we have purchases. Purchases carries debit balances, right? This is a type of expense. And the fact that you always debit purchases, you know, yeah. Drawings is also a type of expense that we treat differently from others, right? Drawings carries debit balance too, 6,200. Then we have salaries, which is an expense again, which means that it carries a debit balance. Salaries, 12,500. Right? The question said that we should calculate the amount for capital. How do we get capital? Remember the accounting equation, guys. Right? The accounting equation: assets equal capital plus liability. So if you want to find capital, it will be capital equal assets minus liability. Right? So this is the one that we're going to use to find capital. So if we want to find capital, we have to add up everything in the debit column, subtract everything in the credit column from it to find capital. Alright? So the capital figure then would be, right, and I'm going to put in bracket the figure so you can know. The debit column add up to 271,800 minus the credit column, which add up to be 197,950. 197,950. When you do the subtraction, the capital, and capital is always credit, and it must be on the credit side, right? Capital carries a credit balance, right? So capital is 73,850. Alright, and this is the balance of the account, nice and neat. 271,800. Both of them would be equal. 271,800. And your trial balance must be equal enough. Must be balanced. So you guys are seeing on the bottom here. Right? Yeah. So that's basically what's going on there. Alright. Alright, so that's basically all you do the trial balance. Nothing too hard about it, right? So let's look at another question now. So let's Alright, so the next question that we are going to be doing now, right? We have done the 2011 question, right? I want to do another question from 2011, but right now I'm going to be looking at a 2012 question, right? I want you to realize that in 2011 they gave a question about ledgers and trial balance, and then in 2012 they gave another question about ledgers and trial balance. The first topic that they have on their list of things to do to test is ledgers and trial balance. So I want you to pay attention to that. So I'm going to do another question. This is a 2012 question now. Alright, 2012. Question 1. It's actually the first question. Right? Question 1. Now the first question that they gave in 2012 was a trial balance question. Let me just show it to you. As I said before, for those persons who are just joining, you can just check in the description. You will see a link that will take you to the question papers, all right, that we are looking at now. So this is the paper. This is the question. Question 1, they gave us a trial balance, and they ask you to do the trial balance, to redraft the trial balance, right? And they said that we should clearly show the correct amount for capital. All right, so we had just done that a while ago for the 2011 paper, right? And if I was thinking, I would just not rub off everything, you know, but that's how it is. So let me just draw my trial balance again. For those persons who are struggling with trial balance, then this should be perfect for you. Let me just draw it properly. All right, so here we are now, almost there. All right, debit side, credit side, right? And these people are called heavy metal. So heavy metal trial balance as at, and then the year is what, the 31st of December 2011. 31st of December 2011, right? You can do it like this too, you know, right? All right. The first thing that they start with is bank overdraft, right? And they debit the bank overdraft. We know already that bank overdraft should not be debited, should be credited, right? So the bank overdraft is at 26,500. Next item that they gave us is cash. Cash carries a debit balance. So the cash amount is 3,200. 3,200. Next item that is given is provision for bad debt. Remember that I told you that all provision account, right, carries a credit balance, and provision for bad debt is no exception. So it's 8,200, right? Next item that is given is bad debt. And the reason why I'm doing this question, right, is because it gives you guys practice, right? It gives you practice, so you can see other expenses, other items, and how it is treated. All right. So bad debt is an expense, so you must have a debit balance, $5,000. Next item, accounts receivable. Accounts receivable is the same as debtors. You would have seen that already, 49,100. Next item, accounts payable. It's the same thing as creditor, right? 54,200 carries a credit balance. Next item that is given, long-term loan. Long-term loan is a liability. Well, loan is a liability in general. So the fact that it is given, right, is 75,000, carries a credit balance, right? Next item there is carriage inwards. Carriage inwards. Remember that I told you that it's an expense, but it's treated differently. So carriage inwards carry a debit balance, 3,600. Carriage outwards is also an expense. That is, well, it's not really treated differently. It is shown in the expense section of the income statement. So 4,500. Then you have commission received. Now remember the last question that we did. In the last question, it was commissions paid. But now it is commissions received. And I told you that commissions paid is an expense, but commissions received is a revenue. So all revenues must be credited in the trial balance. So commissions received, 6,200, right? Then you have rent paid, right? And if this was rent received, it would have been in the credit column, because rent received, like commission received, is a revenue, right? But it's rent paid, so you're going to make a debit entry, right? It's an expense to the business. And then we have equipment at cost. Equipment at cost, right? 90,000. It's a fixed asset, therefore it carries a debit balance. I didn't even have to say fixed asset. It's an asset, so it carries a debit balance. And then it says accumulated depreciation. Accumulated depreciation, right, is the same as provision for depreciation, right? So you don't have to worry yourself. I told you that all provisions carry credit balances, and this is for the equipment, right? So accumulated depreciation for the equipment is 30,500. It carries a credit balance, 30,500. Then you have motor vehicle at cost. Motor vehicle at cost, right? So motor vehicle is an asset, and more specifically it is a fixed asset, so it carries a debit balance. 68,000 is the cost for it. And then you have the accumulated depreciation now for motor vehicle, right? For motor vehicle, which is the same like what we did before. 15,400 carries a credit balance, right? Then you have salaries. Salaries is an expense. Salaries, so all expenses carry debit balances, so it's 40,000, right? And I realize that I'm going off the board now. Let me just turn this down so you can see, you guys. So salaries. Then we have inventory. Inventory is stock, right? So inventory, and it carries a debit balance as well, 16,800, right? Purchases carry debit balances. Purchases amount is what? 74,600. Yeah. And then you have the sales. Sales carry credit balance. We know this already, right? Sales 125,000. 25,000. Then we have miscellaneous expense. Miscellaneous expenses. All expenses carries credit balance, debit balances. So you don't even have to worry about the miscellaneous part. The miscellaneous, it just means small expenses that are too small to individualize, right? So miscellaneous expenses is 36,400. 36,400 carries a debit balance. Then you have returns outwards, right? We know that returns outwards carries a credit balance, and returns inwards carries a debit balance, right? And then we would have to do the calculation for the capital. So returns inwards is 28,000. Debit balance 28 or 2,000, 2,800, sorry. And then the returns outwards carries a credit balance, right? 3,600, right? Right, I don't think you're seeing what's going on. Yeah, right. So there you have it, but you would have to put in the capital. You know, I don't have much space, so the capital, right? You would put the capital down here. You would add up the debit column, add up the credit column, find the difference between the two, and you put in a capital, and you know, balance it off like what I show you in the first one, in the first question. All right. All right, so that's the first part. That's part A of question 1. This is A, and this value is 13 marks. So you got on 13 marks already, you know. 13 marks with this, right? That is good. So if everybody see this tomorrow, on Monday, you guys should be able to do it, and to do it well. So let me just take this off now. I'm going to take this off and then continue. All right, let's look at part B now, the question. Remember, you won't be able to rewind and see what I did, like for persons who are joining late, you won't be able to rewind and see until after everything. Alright, so I apologize about that, but that is how it is. So part B of 2012 paper, it says you are presented with the following day books. So they gave us a sales day book again, and then they gave us a return inwards day book, and they also give us a cash book. So this is the, well, this is this is this part here. They give us this, right, and then they give us this, right? So this is what we are going to be doing right now. All right. So the first part of it says that we are to post the information from the above day books in the personal account of you plumber, right? So we have to show you plumber's account. That is basically what they want us to do. So let's draw up you plumber's double entry account. Debit, credit, you plumber, right? Put in our $sign. Remember, principles concerning double entry. The debit side is basically the receiving side. So if the account is receiving, we would debit. The account is paying out with credit, right? That's a general principle. The easier way to understand. I could tell you also that for assets account, to increase assets account, you debit; to decrease assets account, you credit, right? You plumber, right, by the way, is a debtor to us. So therefore, this account, his personal account, would have appeared in the sales ledger. So let me write sales ledger at the top. Sales ledger. His personal account would come in the sales ledger, right? Now, if you look at the question, right, we were not given any opening balances, so we just have to jump right into it. So September 1, right, and this is on, look on the first page, right, this, we are using this information. So September 1, right, we sold some goods to plumber. So September 1, right, would have sales in you plumber's account, 7,200, right? We also sold him some goods again on September 20. So on September 20, sales, and the amount there is 1,396. 1,396, right? So we finish using the information right here, right? We're going to turn now to this part. We're going to use this information now, the returns information. So the returns inwards information, right? It says that on the 3rd of September, you plumber returned $1,000 worth of goods to us. So therefore, we have to credit his account for that. So September 11, right? Sales returns, or you could say returns inwards, whichever term you are comfortable using, $1,000. All right, but let's look at the cash book now. We have to use the information in the cash book also, right? If you look at the cash book, you will realize that plumber paid us some money, right? September 4, on September 4, plumber paid us some money, right? So September 4, plumber paid us some money, right? Paid us in cash, in check, right? He paid us 5,100. But if you look closely, you will realize that there is discount here, discount of 100. That is what we call discount allowed. Discount allowed must also be credited to his account. So on the same September 4, discount allowed, let me write it out. Oh, I can't write it out, I don't have much space. Discount allowed, right? Discount allowed is $100. Discount allowed is an expense to the business. So even if you're looking at the trial balance, discount allowed would be in the debit column. Discount received is a revenue, and in the trial balance, when you're making it up, it would be in the credit column. Just FYI. All right. So then, yeah, we put in all the information. Now we're going to balance it off. So September 30, right? Or you balance our double entry account, you add up both sides to get their total. This side would add up to be 8,596. So this would be 8,596. This side would be 6,200. right? So I know that the balance carried down would be on the side that carries or that has the smallest amount, which is the credit side. So you subtract them, the difference between both of them. The balance carried down, right, is 2,396. 2,396. All right. So then you just total it off, just like that. Remember, say total must be in the same line. 8,596. 8,596. All right. And then now, the second part of the question now. You see them people here, them not easy, you know? Watch it now. Question B2. Right? They say we should prepare. Question B2. So we should prepare the debtors control account and any other account. Right? Any other account in the general ledger for the month of September. Right? So they're asking us to prepare the, the control account, right? Now remember that control accounts, right, are accounts that check the accuracy of the purchases and the sales ledger. That is what control accounts do. They check the accuracy of purchases and sales ledger, of the purchases and the sales ledger. Right? So just remember that. So this is the debtors control. You have two types of control accounts. You have the debtors control or you have the creditors control. The debtors is for the sale. It's also called the sales ledger control because it checks the sales ledger. And the creditors, right, is called that because it checks the purchases ledger control. Alright, so let's go. So we have sales, right? Sales should go on the debit side in the control account, which is 14,846. And you may ask, where did I get the sales figure from? How you don't see that, right? And this is total credit sales. See it here? 14,000 total credit sales, right? And then you have on the credit side of the debtors, you will record everything that reduces your debtors, right? So you have return inwards, returns inwards, right? Returns inwards would turn out to be 2,950, 2,950. 2,950. How did I get 2,950? Here it is. Right? That's the total. Remember that the control account, it shows totals. And if you don't think you're familiar with control accounts, I do have a video on control accounts. You can go ahead and just check it out, right? Check it out, and it will be there, right? Check out the video on control accounts. All right. I'm going to do a control account question in a little while, so don't worry yourself. So yeah, and then now we have discount allowed. Discount allowed, which is 160. Sir, how do you get 160? All right. Now look at it. Discount allowed. This is the discount allowed column. 160. All right. Your total control account. You do the total, right? Total everything, and then the bank or cash, you can call it that. With this will represent monies that you pay. Your debtors pay to you, so it is reducing the amount of money that they owe to you. So you have to credit it, and the amount of money that they pay to you, our debtors paid to us, right? The amount of money that the debtors pay to us, if you look at it, you would have to add the 5,100 plus the 6,040, which is 11,000 and 11,140. Yeah, right. 11,140. All right, then the balance of the account, just like how you balance of any double entry account. Add up both sides, so your balance carried down would be here, right? And it's 596. Put the totals, ensure that the totals are in the same column. Total is going to be 14,846, 14,846. Yeah, and just like that, you got 20 marks. Ladies and gentlemen, I believe that they're going to be testing that on Monday, so please pay attention. All right, pay attention. All right, so let's do another question now. Another question from 2011 paper, 2011. All right, so what to do? Another question, right? For this session, right? We're going to look at 2011 paper, question 4. We're going to look at control accounts and we're going to look at suspense accounts. All right. Now the concepts, right, for control accounts. What are the concepts? What are control accounts, right? Control accounts are accounts that checks, right, that checks the accuracy of the sales and purchases ledger. We looked at the trial balance and we know that the trial balance checks the accuracy of all the ledgers, all three, right? Purchases, sales, general. But the control account, right, is more specific. It checks the purchases and the sales, only those two, right? To see if everything is all right. Now we have two types of control accounts. We have the purchases ledger, ledger control, which is also called creditors control. We have the sales ledger control. Right, which is also called the debtors control. All right. Obviously, in the purchases ledger control, you would find your creditors, right? Creditors. In the sales, you would find your debtors. All right. All right, good. So, what you need to understand about the control account, right, is you need to understand the correct principle. So with the for example, the debtors control account, right? So with the debtors control, right? All on the debit side, you have to remember that it would contain all information about all your debtors, right? Every information about all the debtors, right? And I don't want to go into much details, right, right now, but you can check out my video, right, on control accounts, and you will get a better understanding. But I'm just giving you a little rough crash course, basically. So on the debit side, you have you will put all items that increase debtors, right? For example, credit, sales, all of these things would increase debtors. You would put it there. And on this side, you put all items that decreases debtors. If you understand this, guys, you're good, right? I give my students formats, right, for the debtors control and for the creditors control. If you go and watch the video, right, afterwards, then you will see the format. But if you understand this concept, you don't even have to watch any video, right? If you understand that on the debit side, you would put all items that increase your debtors, and on the credit side, you put all items that decreases your debtors, then you should be, you would be okay. All right. So it is the same, right? Or let me not say same, but it's similar. Similar for the creditors control. So for the creditors control, right? Because it is creditors and it carries a credit balance, so all items that increases creditors, you would credit. All items that decreases creditors, you would debit. All right. Yeah. All right. Oh, this is the creditors control. Let me write it. Yeah. So if you know this, you don't even have to worry too much. You understand, right? But this is the basic principle, and it is very important for you to get. All right. So let us practice this question now. So it's a 2011 question. It's question 4. So 2011 question 4. Question 4A to be exact. Question 4A. Right, for those persons who may join late, you are very late, but you won't be able to go back and look at what I have done before until after everything, after this recording, right? After this, right? But you can check in the description where you will see the link to these papers. I put all the papers that I'm doing now, right, for this marathon. I'm putting it in a folder, and it is uploaded to a Google Drive. So, and the link is posted in the description. So you can just check the description and just, you'll find the paper, so you can follow what I am doing as well. So yeah, this is it, right? This is the question that we're going to be looking at now. This is a control account question, right? For those of you who are smart thinking, you can just snap a picture if you don't have access to a Google Drive, or if you, for some reason, you don't have access to a device that you can get the paper off the Google Drive. Yeah, so that is the paper that we're going to be looking at right now. Seeing? All right. So it says Mr. Best prepared the following information in order to produce end of year figures for his final accounts. So we are given the sales ledger balances, we are given the purchases ledger balances, right? We are given 2 opening balances. See? 2 opening balances for both purchases and sales. 2 opening balances. All right. We are also given 2 closing balances, but one of them, for each of them, one of the figure is missing, and there's a principle as it relates to that. But when we're practicing, all right. So let's draw up our 2 accounts, 2 control accounts. All right, giving maximum space. This line down here so tend to kind of be not so straight. Need to get a ruler. All right, give it straight here, but all right. So at the top here we have our debtors control. And at the bottom here we have creditors control. This is a CXC love to test control accounts, so I can almost guarantee you that a question will be there on control accounts. Almost guarantee. All right. Now we are given 2 opening balances for both purchases and the sales ledger, right? If you are given 2 opening balances, all you simply need to do is to insert the opening balances where instructed. So if you look at it, it says sales ledger balance, you have debit and credit. So the debit balance, you put that on the debit side. Credit balance, you put that on the credit side. Same thing for the purchases. You do the same, right? And the reason why I'm even pointing this out is because when it reaches to the closing balances, right, it is going to be a bit different, right? So that's the reason why I'm even pointing it out.
So for the sales ledger, the debtors control, the opening balances, balance brought down, right? Balance brought down the 1st of January, so you can put January 1. Balance BD is 25,260. 25,260. The credit balance, opening credit balance is 540. January 1. Balance BD 540. $540. You may be asked in CXC to tell why we have two opening balances. And the reason why we have a credit opening balance is because not only, right, do your debtors owe you, but you may owe your debtors money. That is the reason why I have this balance over here, so right? It is not the norm. You understand? This is the norm. Right? But if you have a credit balance, it means that you owe your debtors money. That's what it means. And it's the same thing for creditors control. It means that your creditors owe you money. Right? That's the same. If you have a balance on the debit side, that is. So let's look at it now. So January 1. January 1 balance BD, right? For the credit, for the purchases ledger. Debit balance is 350, and if you look at it, normally the numbers are smaller because it's not the norm. See, 350, 540. January 1 balance BD 32,130. Right? So yeah, all right. So we enter the opening balances. Now we have other items here that we are going to now register, to record rather. So the first one said total receipt from customers. So your customers are paying you, which means that it is reducing the amount that they owe to you. It's reducing your debtors. So you're going to make a credit entry, right? So total receipt from customer. This is where you can write bank or cash because the question did not say what medium they used to pay, right? 392,690. 392,690, right? Next item says total payments to suppliers. So you are paying your suppliers, right? Which means that it is reducing the amount that you owe to your creditors. So you have to debit it. So you have bank, cash, or cash, and that amount is 308,160. 308,160. Next item that is given, purchases on credit. This is increasing your creditors because you're buying on credit, so you would credit it. Purchases. Put purchases there, and the amount is 321,100. Right? Next item that is given there, sales on credit. Right? You are selling goods to your debtors, right? Or you're selling goods on credit, which means your debtors is increasing. So you would debit the debtors control. So sales, it is what, 412,500. Next item, discount allowed. Discount allowed, it would refer to the debtors control because you are giving discount to your debtors, right? Please pay attention to that. And it is reducing the amount that your debtors owe to you, so you will make a credit entry. Discount allowed. Don't think I have enough space, guys, so I'm just doing that. So discount allowed is 3,220, and then I have discount received. Discount received, it is reducing the amount that you have to pay your creditors. Therefore, it is going to go on the debit side in your creditors control. Pay attention to that as well. Discount received, and the amount for discount received is 4,660. All right, and then now we move on to the next item, which is returns inwards. Some you may not see they say return inwards. They may say sales returns, but it's the same thing, right? So returns inwards 2,100. It is reducing the amount that your debtors pay to you because they are sending back some of the goods to you. So you're going to put it on the credit side. So returns inwards. And the amount for returns inwards is 2,100. Right? And then the next item is what? Returns outwards. You do the opposite. Right? So returns outwards on the debit side of your creditors control. Returns outwards would refer to your creditors because returns outward mean you're sending back goods to your supplier. You don't like it, whatever reason, you're sending it back. So that's why you say returns outwards. That's why it's relating to the creditors control. So returns outward is what? 1,500. Man, it's so hot. All right. Then we have bad debt, right? Bad debt is when a debtor is not able to repay their debt, right? And so obviously bad debt would relate to your debtor's control. It would reduce the amount that they have to pay you, so it would go on the credit side. Bad debt, right? So bad debt written off is 2,800. All right, and then now they have another item that says balances in the sales ledger set off against balances in the purchases ledger, $500. This thing right here, right? Balances in yeah, that. Now that is what we call set off. Now set off, right, is when you owe your creditor owe you, right? Basically that is the scenario. So you know, instead of you paying your creditor and your creditor paying you, you paying your debtor paying you and you paying your debtor, right? What happened is, you know, you just set off the amount, or you squeeze out, we like to call it in Jamaica. All right, so set off is not like a contra entry. It must be shown on the credit side of the debtor's control because it reduces your debt, reduces the amount that the debtor owes to you, and on the debit side in your creditor's control. So set off would go here. Set off for $500, and the set off for $500. All right, yeah. All right, so we're continuing with the question. Now we are given the closing balances, 2 closing balances, right? However, one of the figure is missing for both the purchases and the sales. Now guys, listen very carefully, as it relates to closing balances, right, in control accounts. If you are given 2 closing balances in the control account, right, then you have to basically switch the sides. Right? I could go into the whole theory of why you need to switch the sides, but just for now, exam is Monday, just switch the sides. If you're given 2 closing balances in a control account, you switch the sides. You would not do that for the opening balances, but only for the closing balances. All right, cool. So then it says here sales ledger balance, right, at the end of the period, credit. They didn't give us a debit balance, but they give us the credit balance. And remember what I said about switching the sides? So if it's a credit balance, then it means it should be on the debit side. Very good. So it is $360 and it should be on the debit side. So it's what, January 30, December 31, sorry. December 31, balance carried down. Therefore, we have to find this balance. We don't know this balance, right? Same thing for the purchases, right? They gave us the debit balance, so we know that that debit balance must be placed on the credit side. Very good. December 31, balance CD, and the amount is 230, right? So we have to find this one. All right, so we're going to balance off these just like a regular double entry, right? So we add up both sides to get their totals, right? And so the difference between both sides for the debtors control, right, is 36,270, 36,270, right? And the total is 438,120. All right. Right, so this side would add up to 438,120. This side would add up to 401,850. Right, you subtract them, you get the 36,270. Right, for the creditors control now, the balancing figure would be 38,290. 290. Right, the debit side would add up to be 315,170. The credit side will add up to be 353,460. So 353,460. 353,460. Yeah. And just by doing that, you whoop up a 15 marks. 15 marks, people. 15 marks to do all of this. Right? This not hard. It's easy, man. Right? It's easy. I'm sure you're down the bottom there for those persons who may not be seen. Yeah. Yeah. It's easy. Easy 15 marks that. Right? So important for the learn control accounts. Right? Because it's easy 15 marks that. Alright. Alright, so I'm going to take this off. No. Right, so if you want to snap, a snap. Quick. Alright, so let's rub this off now. Leaving us some snap time. Alright, good. $15 marks right off the bat, you know, guys. I tell you, control accounts, you need to learn it. It's easy and it's fun. All right, so listen to this now. Part B, 4B. All right. It says Mr. Best down the bottom here. This is what we're doing now. Right, yes, sir. Right, that is where we're going to be doing. Mr. Best extracted whatever. Yeah. So Mr. Best extracted a trial balance on the 31st of July 2010, which failed to agree by $7,425. A shortage that is on the debit side of the trial balance. They said that a suspense account was opened for the difference. In August 2010, the following errors were discovered. So this is basically asking about a suspense account, right? Suspense account. Suspense account, right? Now, what are the principles that govern suspense account? The suspense account is used to get the trial balance to balance. If the trial balance is not balanced at the end of the period and you know you need to produce a final account for your supervisors or whatever, you use the suspense account to balance the trial balance. I must hasten to tell you that if the question does not specifically ask you for a suspense account and you are doing a trial balance question, right, it would not be wise of you to insert the suspense account in the trial balance. You know, some people that try tricky system and say, oh, well, I learn about suspense account. My trial balance not balanced, so I'm going to put it in the suspense. No, unless it is a suspense account question. This is a suspense account question, right? So, in this question, right, they said that the trial balance is not balancing, and the shortage is on the debit side, which means that the debit side is short by $7,425. You would insert the suspense account there, and you would also make a record in the suspense account here, right? So trial balance trial balance difference of 7,425. It is very important to understand that whichever side is short in the trial balance, it is the same side that you will put the information on in the suspense account. So in the trial balance, as was stated in the question, it was the debit side that came up short. Therefore, you are going to put the information on the debit side in the suspense account. Alright? I don't think I have a video on suspense account. I don't think so. Right? Yeah. Then it move on to say that in August 2010, the following errors were discovered. The first error, the sales day book had been undercast by $4,100. What does it mean when it says undercast? It means that it was short. So the sales day book was short by 4,100. If we want to increase the sales, we would have to make a credit entry. And if we are going to make a credit entry in the sales account, then we have to debit the suspense account. Right? So you will debit the suspense account with sales. Sales, which is how much? 4,100. Right? And you would credit the sales account. Alright? Good. The next item, number 2, states that a check paying $3,500 to B. Ashton was entered in the cash book, but not in the personal account. Right? So you pay a check to B. Ashton. The check was entered in the cash book, which would have meant that it would have been on the credit side. Right? So, alright, good. But it was not entered in Ashton's account. It should have been in what? The debit side in Ashton's account, following double entry principles. But it's not there. Therefore, we have to debit Ashton's account, and then we have to what? Credit suspense. Very good. Very good. Right? So B. Ashton. The suspense account is used to solve problems where errors does affect the trial balance. So if the errors do affect the trial balance, then the suspense account is brought into play. 3,500. If the error do not affect the trial balance, then you would use the general journal to correct it, and you would have the errors would have fancy names like error of omission, error of commission, all of those things. All right. Then now you have the third one, inventory at the close, right, was undervalued by 3,900. So the closing inventory was short by 3,900. If you want to increase the inventory, you'd have to debit the inventory, right? And if you're going to debit the inventory, that means you're going to credit suspense. So inventory 3,900, right? And then now the next one, it says discount received of 4,125 from a supplier was not posted to the supplier's account. So you receive a discount, that's a revenue, right? You receive a discount from a supplier, so you would credit the discount received account, but it was not posted to the supplier's account, right? So if you're going to post it to the supplier account, you have to debit the supplier account, and you have to what? Credit suspense. Very good. Discount received of 4,125. The thing about the suspense account is the suspense account is a temporary fix for the trial balance when there are errors that will affect the trial balance, right, from balancing. But when all errors are found, the suspense account should balance out if all the errors are found, right? And so if you look at my suspense account here now, it is balanced. There is no balance on the account. Both sides are equal. This would be 11,525, and this would also be 11,525. And that is how I know that my there's the error, all the errors are found, and you can even say that you can use it to see that your suspense account is correct. And if you look at the question, that's 20 marks. that I did in less than half an hour, and I was teaching while doing it, right? So that is very simple, right? And it came, it's a question, 4 question, right? But back then you used to have section 2, right? But now it's just 5 straight questions, no sections. But it was a question 4 question, which means that it was at the back of the paper, and it's 20 marks. Can you imagine that? Very simple. Join me tomorrow. For part 2, right? I will be looking at partnership. I'll be looking at income statement, adjustment to income statement. I may look at depreciation, and those things that I think they call it adjustments, right? Yeah, they call it adjustments, the depreciation and all of those stuff. I may not get the chance to look into everything, guys. It's really tiresome for me to do this, right? But I want to help you guys. If I can get you to be comfortable with at least 5 out of the 9 topics, then I think you should stand a great chance of passing the exam if you have good SBAs, right? But see you tomorrow, all right, 4 o'clock. Let me know what you think about, you know, my classes and my style, what I could have done differently. It's really hot where I am, so I apologize for my perspiration, but God bless. Keep practicing. See you tomorrow.